Hi everyone, welcome to a new episode of deJÖN'ün. Our guest from one of the promising Perp DEX projects in space, I think. And today, together with Tervalix, we are hosting Ruslan, who is the CEO of Exented, founder of Exented. For those who don't know Exented, let me summarize it. Exented is one of the rising stars of the perpetual market. And we will be talking about Ruslan journeys as a founder and the current state of crypto, of course, all things about the Extended. So, welcome, Ruslan.
Thanks a lot. Hi, guys, and hi, everyone, and thanks for having me here.
Yeah.
Pleasure.
How
It's a
are you?
pleasure to be on the episode. All good, all good. Thanks. How are you?
Nice. It's very nice for us. And glad to hear that because I am Extended user and I am happy to see things running very smoothly. So, Taro, what do you think about the first question?
Yeah. Shall I ask the question?
Yeah, you can.
Okay. So, Ruslan, we have been following Perptex space very closely, actually, and we have hosted 3 different episodes. One was lighter, another one is Ipachi, and now you. I think it's a great place to showcase your product here. So, our users are very into Perptex space. So I want to start the question as a classic question. We would like to start from your background and how you get into this space, crypto space. What clicked for you? So you want to build on crypto because it's a hard place to build, I believe. How everything started on your side?
Yeah, sure. Thanks for the question. So, essentially, my first exposure to crypto was in 2016, right? Just as a regular user, traded a bit, invested a bit, played around with it, right? And then in professional capacity, right, I only essentially started working in crypto when I joined Revolut in 2021, right? So back then I joined Revolut as basically as the lead operations manager, right? And they've given me a choice: either I want to do crypto, right, or I want to do acquiring, right? And back then in 2021, crypto was booming and the choice was obvious, right? So I decided to join the crypto department, right? And I joined it as the head of crypto operations. And basically, I was responsible for the P&L of the Revolut's crypto department, right? When I joined back in 21, it was basically a very small department, just one team, right? But it was generating significant value for the company, for Revolut, right? And basically, my objective was to scale the department, introduce new products, right? Build up the user base, build up the revenue flows. And essentially, I spent 2 years doing that, right, as the head of crypto operations. And then in June 2023, right, I essentially left Revolut and started Extended. That's briefly
Nice.
about my background.
It's kind of very busy background, but I think with your currently working background experience, it's kind of matching with the accented stuff, I think. So we can move to our second question, I think. What do you think about Taro? Taro is a little
Yeah.
micro now. Yeah. So
Yeah, you mentioned about Revolut, right? I didn't even know Revolut had a crypto department, by the way. I thought it was just payment app, to be honest. I think you and your co-founders actually all are coming from Revolut. I saw that, and it was interesting because you wanted to join crypto space after FTX collapse. It should be a hard decision, but it should click something after FTX collapse. And I want to learn, like, how did you all came together? What did you want to change in this space after FTX?
Of course. Yeah, look, actually, so we have 10 team members currently, right? So we're a relatively small team, but 8 out of 10 team members are my former colleagues at Revolut, right? And as well as the 2 co-founders of Extended, we work together in the crypto department at Revolut, right? And essentially, actually, the collapse of FTX was one of the triggers for us to leave the company and start building Extended. Just because it's a bit of the funny story, right? But in the end of 2022, right before the collapse of FTX, we actually had a call with them and we're discussing some partnership or some collaboration opportunities. It was like very early stage discussions, but nevertheless, like we're chatting to a lot of crypto players back then, somehow benefit from them. So we took a call with FTX, and they were basically like essentially shilling us the bright future of the potential partnership that great, right? That basically they are confident they will be the top one exchange, etc., etc. And then the week after they collapsed, right?
Oh,
So
fuck.
basically happening in real life, right? As we were chatting with them, and yeah, that was one of the first triggers where essentially we thought that basically it would be amazing, right, to launch a product where you can get all the functionality, all the benefits, all the features that were offered on FTX, but in a completely trustless and self-custodial way. And basically, we were just building up on top of that idea, and that was essentially the main trigger for us to leave Revolut and to start working on Extended.
Yeah, it's interesting because during the FTX collapse, people were afraid about the crypto space, but it was very bullish because crypto is all about DeFi. It's all about self-sovereignty. It's all about your keys, your money, right? And FTX was living proof of that. You should use your funds in your wallet. It should be completely like non-custodial way. And I think you see that as an opportunity. It's great. Actually, I want to move on Extended as well. I know you rebranded
Mhm.
and you started as some other company, but I don't recall, but it's not important. And you started this company as a StarkX, right? StarkX product.
Yes,
And right now you are moving to Starkware, I believe.
Starknet. Yes.
Starknet. Yeah, sorry. Yeah, you're moving to Starknet. What was the like reason behind that? Because we are familiar with the YDX. Maybe some of our listeners are not familiar, but the YDX also started as a StarkX product. Then they wanted to move to their own chain on Cosmos, but you are not moving
Mhm.
your own chain. You are going to build on Starknet.
Mhm.
So, what is the reason behind this topic? Actually, I want to ask.
Yeah, of course. Look, when we first started Extended, right, we're basically choosing a settlement layer that was already effectively tested, right, and which already has proven that it can work efficiently. And back then, StarkX was essentially the best choice, right, for us. But then, as like we always understood that we want to go beyond the perps, right? And essentially, the next priority for us is to integrate the lending market on the exchange to support non-stable coin assets as the collateral. And then we'll be expanding into spot, essentially offering the cross-asset collateral unified margin, etc., etc. We have like quite ambitious plans on expanding the product portfolio. However, StarkX is basically limited to perps, right? And we are just migrating to a new settlement layer, which will be Starknet, that will be composable and will allow us to expand our product offering as the exchange, right? Because basically, as you know, currently we offer USDC settled perps. Then we're planning to do the migration to Starknet in the next couple of weeks, right? Once we accomplish the migration, we'll focus on supporting non-stable coin assets as the collateral on the exchange. The first step there will be is that we'll tokenize our own vault shares and effectively allow users to use the funds which they've deposited into our vault, right, as the collateral on our exchange with a certain discount. That will be the first step. Then after that, we are going to support other non-stable coin assets with the main focus on all the wrapped versions of Bitcoin and on all the yield-bearing assets. so that effectively users will be able to use them as the collateral on the exchange, right? To trade USDC settled perps. After that, we're going to introduce our own spot markets, and basically at this stage we'll have an integrated offering where we'll effectively have cross-asset collateral unified margin across perps, spot, and lending markets, right? Once this is done, right, the idea that we have and which we're already working towards is that effectively we'll launch an EVM compatible network on top of our exchange, to which we're going. We're
Okay.
effectively going to represent our unified margin as an ERC20 token to that EVM compatible network, right? So imagine that, let's say you deposit one wrapped Bitcoin as the collateral on the extended. Let's assume its value is 100K. You started trading USDC settled perps. Let's say you made an unrealized profit of 50K. So the total margin of your account is 150K. We are going to expose those 150K as an ERC20 token to our own EVM compatible network on top of extended. And the way you can think about it, if we draw an analogy with a Hyperliquid, right? They have Hypercore and they have Hyper EVM, right? So essentially our extended core, right, will be built on top of Starknet with all the trust assumptions and with all the funds being custodied with Starknet. So we as an exchange operator will not have access or won't be able to somehow manage those funds, right? And then our EVM will be launched on top of that, and the unified margin on the exchange will be exposed as an ERC20 token to our EVM compatible network, right? That's basically the reason for the migration. So the primary reason is for us to expand the product offering, and we'll be doing it gradually. And basically, I've explained the roadmap on how we see it. As for the migration process itself, right? Like we are trying to do it as simple and as user-friendly as possible, right? So unlike DYDX, where essentially users had to withdraw funds and manually deposit them into the new instance of the exchange, right? The way it will work with us is that basically when the migration starts, the users will they will essentially need to close their open positions. Once they close their open positions, they will need to press a button to migrate, right? We're going to essentially they will even remain on the same domain, right? We're just going to flip the UI. They will see the new exchange, and the migrated funds will automatically arrive here. So the migration process will be much simpler and much sleeker than what users had to go through with DYDX. Yes, and we believe that this process is simple enough for the users to migrate. Also, they will have there will be a period of time, right? We don't force them to close all the positions immediately. That will be a effectively a willingness choice, right? Where the user says, okay, I'm currently ready to migrate. He closes the positions, presses the button. We effectively show him the new UI under exactly the same domain, right? And the funds which he has migrated arrive to the new exchange. So every single user will never see two exchanges in parallel, and they will not need to interact with two exchanges in parallel, right? So the only interruption for the regular trading behavior will be that they will need to close their positions, but that's pretty much it.
Okay, that's interesting because the DYDX didn't have the ecosystem you want to build. I assume you want to move to Starknet because you need that composability for your future plans, and then you're going to launch your own EVM chain. It's also interesting because Starknet is Cairo, right?
Yes.
So you started at StarkX, you're going to implement some Cairo smart contracts on Starknet, then you are going to launch on another EVM chain. That's pretty interesting. But Hyperliquid trying that. I'm not sure if their Hyper EVM is going to be like a killing EVM chain. I'm not expecting that. TPS rates are pretty low. their core product is hypercore, but they don't have that vault ERC20 representative of the entire balance sheet of the exchange. It's not compatible with their hyper EVM actually. That's a pretty important point you are going to fix. But you also have, I believe, sub 10 millisecond latency right now. What would be look like after Starknet migration? Because still, even you are going to launch your own EVM chain, the main product will be Perp DEX, I believe. Like main fee generation, revenue generation will be there. So it should be pretty important because it's going to more and more competitive. We were talking with Lighter, with Hibachi, and they are even mentioning 5 millisecond rates, TPS rates, and yeah, that's interesting. If Starknet is going to keep up with that latency, or how we are going to fix that?
Yes, of course. That's a very good question, right? But essentially, the most important part is that the latency on the exchange will not be impacted by our migration, right? As well as it won't be impacted by the launch of the EVM compatible network, because essentially the way the exchange currently works is asynchronously, right? Meaning that when the user places an order, right, we're effectively processing that order in our off-chain infrastructure. Once the order is matched and the trade is and there is a trade, we're settling the trade currently on StarkX. We'll be settling it then on Starknet, right? But we're giving a user the response and the finality based on our off-chain processing, right? Which basically allows us to keep the latency below 10 milliseconds, right? And in reality, like if you check, I don't know, the 50th percentile of all the orders, I think we also have a 5 millisecond latency, and we'll be continuously optimizing it, right? And further improving the latency on the exchange. But essentially, like the nature of our synchronous infrastructure, where effectively we are running an off-chain state of the matching engine, right, and an on-chain state which represents the settlement, allows us to keep the latency right at the current level, or even improve it in the future post migration.
Got it. So basically, you are going to use Starknet for settlement, and
Yes,
Yay,
and
probably.
And that's actually a very important point, right? The way we think about it is that Starknet is essentially a settlement layer for us. And then from the user standpoint, all the security and all the trust assumptions are actually with Starknet, right? Because basically this is where the user funds are custodied, right, as part of the Perp DEX. But then users don't need to interact with Starknet themselves, meaning that they can still continue using EVM wallets, will be supporting deposits and withdrawals from and to the EVM chains, right? And we'll be actually expanding the number of chains that we support, as well as increasing all the limits. So from the user standpoint, like if they don't want to, they don't need to interact with Starknet at all. However, all the funds are secured by the Starknet security, which, as you know, is top notch and probably best in class. Right?
So I want to ask you one of the most important questions for community and I think airdrop farmers. How does your point program work? And also, could you share some info about how the points formula works and what actions are the most points, and if it's public actually, and also how you prevent wash trading, because many people try to making some wash trading for the gaining lots of points.
Yeah. Look, as for the points program, in reality, it's super simple, right? Like all the organic activity on the exchange effectively earns points, right? And basically, there are three types of organic activity if you can think about the exchange overall, right? One is trading, right? Secondly is liquidity provisioning, right? And liquidity provisioning, you can either put funds into the vault or you can effectively be market making yourself. And the third one is referral activity, right? So essentially that you can earn a share of points that the users you referred earned, right? Now, so the program is the points program itself is relatively simple. Of course, like there are some formulas which we are keeping to ourselves on how we actually distribute points, but in principle, fundamentally, it's super simple, right? It's trading, market making, either directly for the vault, and referring users, right? As for the wash trading, we indeed have effectively some metrics on how we track the wash trading and how we effectively penalize the wash traders, right? Like I probably won't share them publicly, right? But effectively, it's relatively simple as well. We have some reference points, right, on the distribution of normal user activity, and whatever spikes out of that activity, right, is considered to be like whatever spikes out from the regular distribution is considered to be abnormal, right, and most likely non-natural.
So before the close the point questions, I have one more question about the point part, because some community members say to us the point program is almost half done. So are we late, or we can join the party?
Look, in reality, we think about it that we are still super early, right? Because basically our points program has been live for, I think, 2.5 or maybe 3 months, right? And essentially, we are not rushing the TGE, we are not rushing the token, just because, as I've described previously, we have like a super ambitious product roadmap, and we want to get along that roadmap and progress towards our objectives of launching the unified margin logic, having our own EVM compatible chain, etc., and then do the TGE once we're better positioned to that, both in terms of the growth metrics as well as in terms of the product offerings that we have. And it's like we are quite early into the points program itself.
So nice to hear that some of our listeners should join after this explanation. And also, I want to move other question, because actually I follow the loss of API and staking program, and also I like the extended vault sites. Extended as a vault gives yield from trading fees. And what APY ranges have users seen so far, and what the risk controls do you have in the place to protect depositors?
Yes, that's a very important question, right? So as for the APR, basically, I think since launch, we've seen it somewhere in between 20 to 25%, right, annualized. Now, as for the sources of those fees and APR, basically there are three sources, right? One is the trading activity of the vault. The second one is that it earns a share of the exchange fees. And the third one is that it processes the liquidation flow, right? And basically we have different protection measures, right, for each type of activity. So for the trading activity, we are limiting the maximum exposure that the vault can take, because basically the more exposure the vault has, the bigger is the volatility of the vault's equity, right? So we're limiting the vault's exposure. So as you can see, even on this screen, is that we have 9 million of equity in the vault, right? And the exposure is about 730K, which is slightly below 10%, right? Now, as for the liquidation activity, basically the way it works is that whenever there is a user who gets liquidated, the position is transferred to the vault, and then the vault liquidates that position, right, through the order books. And effectively, the theoretical risk there is that essentially the vault can take a position which it cannot liquidate and hence bear the losses. What we do have against that is that effectively, one, the vault will never take a position which it cannot liquidate, right? So essentially, when there is a liquidated user, we are
Something like
transferring the, excuse me?
something happened to hyperliquid, right? Something like that, you mean?
Yes. But effectively, the way our vault is protected against that is that when the position is transferred to the vault, right, it immediately tries to liquidate the position. If it cannot liquidate the position through the order book, it basically reverts the position to the user who was liquidated and never takes exposure to that position, right? That's
Interesting.
one.
Yeah, nice.
Then the second thing is that we're also limiting maximum losses that the vault can take both on a single trade. So for example, like if it needs to liquidate a position on Bitcoin, let's say it can at maximum lose 50K per trade, per liquidation trade, right? If we're talking about less liquid assets, those thresholds are lower. So that's the second protection measure. And the third protection measure is that we are effectively saying that a given market can only access a certain share of the vault for the liquidations, right? So to summarize, right, like one, the vault can never take a position which it cannot immediately liquidate. And the second one is that we have per trade maximum losses which the vault can take. And the third one is that we have daily limits on the share of the vault that a given market can consume for the liquidations.
Before the moving next question, I want to ask one more question about the vault. And there aren't even 1,000 people now depositing in extended vault right now. Will you increase these limits, and what's your plan
Yes.
for that?
Yes. So, like, effectively, we are scaling the vault along with the growth of the exchange, right? Because basically, we want to preserve the yield and the APR for the depositors, and hence we are effectively gradually increasing the limits. And as the exchange scales, as our revenues scale, we'll be increasing the cap and allowing more and more users. And at some point, when we are big enough, we're just going to open it for everyone, right, without any limits. Obviously, at this point, we can expect that the APR will likely drop, right, to some natural level. As you know, probably, right, on Hyperliquid, I think the Vault APR is currently about 10 to 15%, right? Our Vault APR is about 25%, right? And basically, the way it is achieved is that we're capping the maximum deposits into the vault, right? We'll continue with the same strategy for a while. Like, I don't yet have like a target number in mind, but let's say at the point when the vault reaches 30 to 50 million TVL, or maybe somewhere in between 20 to 50, we're going to just open it up for everyone.
So, nice answer and nice explanation.
By the way, I want to point that like we did a lighter show, right? Users might think that extended vault doesn't give any points because lighter was like that, but it's not true. Extended actually gives points to those vault depositors, so you can take the 25% yield on top of your points. You will be generating points. It's probably going to like a lot worthy. Yeah, I want to move that to the perp deck space actually. Like we have been giving some names. There are also DYDX, GMX. Those are kind of old tech right now, but lighter Hyperliquid. They are coming, right? Bullet. There is a Solana perp decks as well. What do you see Extended's biggest edge in here? Like how you are going to compete with them? What will be your main tracker point? What will be your main product you want to like you are going to try to get the users for?
Of course. Look, a couple of thoughts there, right? Firstly, on the market structure, right? We fundamentally believe that in the longer run, the market structure of DeFi perps will change because basically now I think like 80 to 85% of the market is dominated by Hyperliquid, right? If you draw an analogy with centralized exchanges, there you see Binance having somewhere in between 30 to 35% market share, and then there are a lot of let's say second-tier exchanges, I don't know, like OKX, Bybit, and the others, right, who also have a very sizable market share, right? Now, we believe that in the longer run, naturally, right, the DeFi perp space will also converge to something similar, where you will probably have one major player, but its market share will reduce from what we currently see. And then you will have, let's say, 4 to 5 other exchanges, right, which also have a sizable market share. Our objective as of now is to secure our slot among those exchanges who have a sizable market share, who will have a sizable market share in the long run, right? And effectively, we believe that there are two things, right, which differentiate Extended. One is our focus on the unified margin logic, right? Because basically, as of now, there are no perp DEXs who have properly implemented that, and we are aiming to be the first one with that offering, meaning that you can use non-stable coin assets as the collateral on the exchange, right? Which effectively increases the capital efficiency, right? Allows traders to get different sorts of exposure where, let's say, they're using their stale Bitcoin to trade perps, right? And just enables much more things such as basis trading within one exchange, etc., right? And we believe that our push towards the unified margin logic will allow us to secure a spot among the leading perp DEXs in the longer run. That's one. And then second thing, which we also believe is important, is we're effectively pushing the integrations with the wallets and various Telegram apps, right, through our own builders code, which we're currently developing and will soon deploy, right? We already, I think, have 5 or 6 teams building on top of Extended, including some wallets, Telegram apps, external vaults, right? So essentially, we want to double down on the strategy where we are getting partners to do distribution for us, right? And we are also like in discussions with some bigger players, which we can't yet name, right? But hopefully we'll get integrated there and get access to their retail flow.
Interesting. For those who didn't understand about the boilers code, it's basically going to allow any application to launch their own perp DEX, which is powered by Extended. Probably they are going to get some fee share, probably 50%. I am assuming after Hyperliquid or around something like that to compete with them. Thanks. It's quite good looking here actually. Like because we know that if you trade right now on Extended, you can easily get into top 2,000 users. There are not much competition happening at the moment because it was under farm. To be honest, I don't like to call that farm, but anyway. But the top users generated lots of points. They already collected, but still there's a skin in the game. You can definitely get into. But these points are going to be a token eventually, I believe, which you also mentioned about TGE. And you also mentioned about EVM chain you're going to host by yourself. Probably it's going to validate that chain. These tokens are going to be crypto economic security for that chain. Am I correct?
Yes, that is basically the vision in the longer run, that effectively token holders will serve as validators of both our EVM compatible chain, as well as they will be serving as validators of the, let's call it, operator of the exchange. So essentially, they will be securing the order book, the liquidation logic, and all the currently centralized trading logic in the longer run will be validated by the token holders.
Nice. There will be a utility for the token. We can say that for sure. I think Bedri have another question here.
Yeah, I want to move to like the what's next for the future, because lots of listeners curious about what is the next move, or is there any future partnership for the Extended sites, and do you have any news like that for the listeners?
Yeah, look, as I mentioned, we're pushing our builders code that will allow external applications and like effectively external interfaces to launch on top of extended and to get basically offer their own perps powered by our infrastructure, right? And
Mm-hmm.
effectively, in that regard, we are one talking to wallets. Secondly, we're talking to a large fintech, right? Thirdly, we're talking to various Telegram apps that will be launching on top of us, right? I would say that probably it's a bit too early to name the names, right? But we'll be sharing more information as we go and as we secure those partnerships.
So
Okay,
nice.
we got this as alpha, but that's it.
And Taro, I want to ask you one more question about the development side, but mobile side, because I am a, like I said, extended user, and I use lots of time with my mobile phone. And
Mhm.
I think your mobile UI UX currently development, right? Under the development.
Yes.
Is
So
there
essentially,
any deadline for the development?
yeah. So effectively, the existing app is just an MVP. It has maybe like 20 or 30% of functionality.
Yeah.
But basically, we're expecting that by the end of this week, we're going to release two new screens effectively on the mobile. One is the portfolio that will allow users to manage all their positions from a single screen. The second one is the vault, right? And then we'll be adding points. And basically that will be our pro mobile app with most advanced features and functionality that we have on the exchange. And after that, we'll also start working on the light version of the mobile app so that every single user, they can basically switch between the pro and light versions within the same UI and just choose whatever interface they want to be trading through, right? And that's basically the plan.
Yeah, nice to hear that. And Taro,
This should be the vision, man. Like mobile applications. Yeah, still we don't have many in crypto. Like they are still clunky. Most things are only wallets, and even though they are like wallets, they cannot even product themselves very good way. Phantom is doing fine, but
yeah,
lots of clunky stuff we have. I really want to try because I was trying the YDX back in like 2022. Even that time, it wasn't great at all. So you didn't want to share too much alpha with us. I want to give another chance. Like you didn't mention that name of the collaborate. You are going to collaborate the project name. I don't know. But is there any alpha you can give to our listeners? Because it has been, I'm checking 40 minutes. If they're going to listen this, maybe they want to learn a bit
yeah.
tiny stuff.
Yeah, look, as for the alpha and extended, I would say a couple of things, right? Like one of the first features that we're going to launch is will allow users to tokenize their vault shares and to use them back as the collateral on the exchange, which basically
Nice.
will enable all the depositors to use their collateral both on the vault to generate APR, right? As well as to use it as a collateral to further trade, right? And we're already currently developing that product, so that shouldn't be very long after the migration, right? That's one. Second, as for the partnerships, like they in reality, right? It's super simple. One is we're trying to onboard as many interfaces and UIs to build on top of Extend as we can, but we're also obviously focusing on the big partnerships, right? As for the big partnerships, we're talking with a large fintech who is planning to launch their own self-custody wallet, right? The only thing I
Wow.
can probably say at this stage is that they have millions of crypto users, and hopefully we'll be able to offer our extended product through their interface to those users.
If it's Revolut, it will be too easy. So I'm skipping that. Anyway, thank you so much. Thank you so much for that. So what about TG, by the way? I don't want to miss that. Do you have timeline? What is the product timeline right now? actually we can close with that
Yeah.
question.
So look, the product timeline as of now is as follows. So to do to start the migration to Starknet in a couple of weeks, right? Then essentially in the middle of autumn to support vault shares as the collateral on the exchange. Then probably by the end of autumn we'll support other spot assets on the exchange as the collateral, right? Then by the end of the year, we want to have like a full unified margin offering with integrated lending spot perps, right?
Mm.
And then we'll start working on the VM compatible chain. In reality, we're already working on it, but it's not yet public. We'll start releasing bits and pieces of it closer to the end of the year, early next year, right? And then at some point in the first half of the next year, we'll do TG once we're ready for that.
Yeah, it's quite straightforward. Great to hear
Yeah.
that. So yeah, I think I run out of questions. It was a lovely episode. Bedri, do you want to add anything here, or I can do the closing?
No, I think we can close because it's kind of great episode for understanding the extended, and people who wants to join the extended should benefit of this episode, I think. So it's nice. I enjoy it actually.
Thanks a lot,
Yeah.
guys. Also, great questions and enjoyed the conversation, right?
We didn't push a lot. Maybe next time, if we are going to have another episode in 3 months when you ship that Bolts or ERC20, like I'm really wondering if you are going to build those lending protocols on top of extended by yourself, or are you going to try to create an ecosystem from zero on your EVM chains? Those are also interesting topics I want to discuss. But yeah. Anyway, I think it's on another episode. Can we get a promise for that?
Sure. Would be happy to be back with you guys on another episode.
Okay,
Nice.
awesome. Thank you so much. Okay, guys, today Ruslan, founder of Extended, was with us, and it was a great episode. He gave lots of alpha. He gave lots of points about the product's future. You should definitely listen if you are just seeing this from our shorts or our, I don't know,
Trailer.
your trailer. Yeah, you should definitely listen. Thank you so much, Ruslan. It was a great episode.
Thanks a lot, guys. Thanks for having me.
Thank you.
Have a great day. Bye.
Bye-bye.
See ya.
See you. Bye.